Buy now, pay later companies like Affirm, Klarna, and Afterpay have now been reported as saying that they will soon be reporting to the three credit bureaus. So today I'm going to be talking about how that could possibly affect you and when you can expect those changes to be made. Welcome back, y'all. If you're new here, my name is Tomy. I'm a former stockbroker and investment advisor. Now on this channel, we talk about things related to personal finance because we believe that ultimately that will lead you to living a happier, more fulfilled life. So if you're looking to see improvements in your financial life, be sure you hit the subscribe button down below so you don't miss any of our future videos. Now, I recently started seeing reports of Equifax stating that they would soon be reporting buy now, pay later payments onto credit reports. Now, the report stated that they said they were going to start reporting around February 2022, and the other bureaus have stated that they plan on following suit sometime later in the year as well. Now, before we jump into how this actually may affect you, I want to make sure that we're on the same page when it comes to what exactly buy now, pay later programs are, okay, and how it works behind the scenes. Now, if you're not familiar with buy now, pay later, it's really called point of sale financing, right? That's the more technical term of it. The idea is that, you're essentially offered an installment loan right at checkout. So whenever you're at some retailer and you're about to check out, they'll typically offer you an installment loan program instead of you having to pay the full amount. So it may be something where, like, let's say your total cart value was $100. What they'll do is they'll break that down into 4 payments of $25. People really love it because, you're not paying any sort of interest, right? You're not paying any fees, and it just looks like a no-brainer when it comes to you choosing whether to finance or whether to just pay the full amount. According to Cornerstone Advisors, just from the year 2020 to 2021, you can see that literally buy now, pay later programs have gone from $24 billion in retail purchases all the way up to $100 billion in 2021 in retail purchases. So you're seeing a 4x growth just from 2020 to 2021. So they're expecting a lot of growth to come in this industry, and that's really why people are starting to put their eyes and starting to really pay attention to what's going on in this field. And retailers who have actually started implementing buy now, pay later have seen that their average order values are jumping from between 30 to 50% when the option is offered, right? So you can see it pretty much is looking like a no-brainer on both sides. The retailers are starting to look at it and say, hey, if I offer this new payment plan solution where I'm pretty much not taking any risk, then it's a win-win for me because I'm able to increase my revenue 30 to 50%, which is huge, and the consumer is able to purchase things that they maybe would not have purchased if it wasn't for this installment loan. Now, there's a tons of players out there, but in terms of the bigger players, right, what's the people who are really fueling the growth of the buy now, pay later space, the top players are really going to be PayPal Credit, which has over half of the market share, Afterpay, Affirm, and Klarna. Now you're starting to see growth in the space be fueled even faster by large retailers starting to enter into the space. You're going to see people like Walmart, who's already jumped in just this past year, as well as in November 2021, Amazon, who recently jumped in as well. So for those of you guys, at least in the US market, you might have noticed that now you have an option to be able to use Affirm whenever you're checking out, as long as you have an order a size of at least $50. So how does it actually work? Now the process really boils down to pretty much this, right? And we're going to use Amazon as an example. So when you go to Amazon, let's say you place over $50 worth of goods into your cart. Once you do that, as you go to the checkout page, you're going to see that you've unlocked a new payment method at checkout. And it should say something like pay with Affirm, right? And then I'll throw up a screenshot here so you can take a look and see what it kind of looks like. Now the plus is, Affirm doesn't charge the customer anything extra to access the actual installment loans. Instead, what they're doing is they're actually charging the retailer, so in this case Amazon, a percentage of all the sales that they generate. So in theory, the way it works is everybody wins. So if you really look at it, in the end, the buy now, pay later companies are the ones really taking all the risk, right? So really the writing was on the wall. Eventually, we all knew that they were going to have to start reporting to credit bureaus because that's another form of leverage that they have to be able to get people to pay on time. There was a statistic that over 50% of customers that have used buy now, pay later programs have missed at least one payment. But nonetheless, this has been a game changer for everybody involved. Buy now, pay later companies now get a cut of every transaction to foot the bill. The customer is now able to order more than they may have had money for at that moment. And Amazon's going to get a huge increase in sales, right? Because now that customers are able to purchase a lot more than maybe they have the cash for at that moment, Amazon's going to see a large percentage or a large increase in amount of sales that they're having or amount of revenue that they have coming into the business. When Equifax was actually quoted about why they plan on adding, buy now, pay later data to their credit reports, they pretty much just quoted as saying is the on-time payment history from buy now, pay later programs can be beneficial to those who don't have long-term credit history. it can demonstrate responsible payment behavior as well as help boost their overall credit scores. Now, for me, my views on how it may actually affect you, I think there's really two obvious camps, right? There's people who use buy now pay later programs and pay on time, and there's people who don't. Okay, right? There's really just those two camps. And I think if you do pay on time, sure, this can possibly help you be able to access more credit, as it shows to other lenders that you have positive payback history. This can be a plus, especially if you're someone who just doesn't have access to credit at all. So if you're someone who maybe you just graduated, or you haven't been able to get approved for any credit cards that you wanted in the past, that this could potentially be beneficial for you, right? So I think for that small subset of people, it makes sense. But for the majority of people, I mean, if you already have credit cards, I don't think this would really help too much when it comes to improving your credit. There's just a small upside potential, but the downside potential is going to be huge. If you're someone who doesn't make the payments on time, right? You're someone who's missed payments in the past, this is going to give you a huge hit, right? Not only is it going to be a red flag for lenders, but also now they're going to be able to see any of the missed payments that you have, right? They're going to see, hey, this guy's been using a lot of buy now pay later programs. He's part of a firm, Afterpay, right? He's used PayPal credit, so he's trying to access as much credit as possible, and we're seeing that he's starting to miss payments. So now maybe we shouldn't approve him for the credit card he wants, or we shouldn't approve him for the installment loan he wants, or the car loan or personal loan, whatever the case may be, right? So I think that they're going to look at it as not only you missing payments, but the fact that you're accessing a lot of different credit lines, right? And if you're accessing this credit that these buy now pay later type of programs, which are more of an impulse buy, right? If you're accessing these types of credit, what other kind of credit are you taking advantage of as well? Me, the way I look at it is I'd pretty much put buy now pay later programs on a slightly higher tier than payday loans, because they don't have the exorbitant fees, but they're also not really programs that, for the most part, if you have money to buy something, you're gonna buy it, right? You won't access to, whenever you're signing up for these programs, it's more so of an impulse purchase type of thing, right? So I think that's kind of how the credit bureaus are gonna look at it, or at least lenders are going to look at it when they see it reported onto your credit reports by the bureaus. Now, hopefully that's giving you an idea how the buy now pay later space is going to be changing here. So if you're looking to improve your credit, check out our credit playlist where we kind of talk about different methods and tips that you can use to be able to see an increase in your credit score. Now, if you're looking to really make a substantial change, you want to be able to really work hard on your credit and have a step-by-step path that you can follow, we do have a credit program that we've released. I'll link to that down in the description below, so you can take a look at that as well. Alrighty, so that's gonna be it for this video, guys. I appreciate y'all watching, and I will see you at the next one. Peace.